Financial Planner, follow us on YouTube.
Trace Mayer, thanks for coming on the show today.
Oh, glad to be here, and always great to be on your show. It's always a lot of fun, and we get to talk about some good things.
Well, I got a few things here that we do need to talk about. I know people are wondering about what is going on with the correction. We just got some news that China is declaring ICOs illegal. And just to kind of get the ball rolling on that, I had to scratch my head as to why Bitcoin reacted so harshly, considering it was Ethereum that had the major run-up because of the ICO boom. So, kind of give us some insight as to what's going on here.
That's a great question. We've seen a lot of these ICOs, whether it's on Ethereum itself or maybe other platforms like Waves or even Byteball or, Bitcoin Cash, Bcash is not necessarily an ICO, but it's similar in that it's like a spinoff. So we're seeing a lot of this financial innovation, and anytime you get a new technology and you get this new innovation, you get it just attracts all types of people, right? And we have securities laws throughout the world, and the SEC, it put out an advisory about ICOs, and it actually declared the DAO that was on Ethereum, it declared it to be a security. So they took an actual stance and had a lot of reasoned logic with it based on the law. And now China's come out and talked about the ICOs, and then you've got Russia, they've talked about it a little bit. So I think what we're seeing is we're just seeing the governments, for the most part, they've taken a pretty hands-off approach to the cryptocurrency space, especially, these new tokens and everything. But I think, when you raise $50 million or $250 million with these ICOs, it starts getting attention. And then also people will get burned, and a lot of people are really going to get burned by a lot of these ICOs because they're basically just a bunch of vaporware. And so I think that's what we're seeing. The governments are kind of stepping in. They let the industry have a pretty long leash, and of course people have kind of taken advantage of that, and so they're yanking on the leash a little bit.
Okay, so this is very interesting, and I've talked to a lot of people over time, and everyone has been telling me, hey, it's coming. The crackdown in the cryptocurrency world is going to come, and rightfully so, or I don't know how you want to look at it. I tend to be pretty libertarian-minded, small government, so it bothers me when the government gets too heavily involved, but you got to know it's going to happen, considering the reason why a lot of people have resorted to ICOs has been to sidestep a lot of the government's red tape. So I guess having said that, is this going to be a big deal, or is this just going to be a short-term blip in the cryptocurrency space? Or is Bitcoin going to rise from these ashes, and while everyone else kind of gets handicapped here?
Yeah, I actually think this is going to be hugely bullish for Bitcoin, and I'll lay out the case a little bit later, but it mainly has to do with the activation of SegWit, which enables the foundation for things called sidechains, particularly two-way pegged sidechains. But when you kind of make the argument about, small government, libertarian type, but, securities laws are mainly about fraud, right? And there has been no shortage of people engaged in fraudulent investment schemes and scams, and there's a lot of that going on with these ICOs. There is massive amounts of fraud, fraudulent misrepresentations, vaporware. It's unending how crazy a lot of this stuff is, and so yeah, a lot of people are going to lose a lot of money. And they're already starting to whine about it. You've got complaints to the Consumer Financial Protection Board up something like 4,700% year over year. So when we're talking about fraud, when we're talking about people engaging in all types of shenanigans. That's what the SEC and China and Russia and governments, that's really what they've got in mind. They think that they're doing the good work, right? That they're helping protect people against these scammers and fraudsters trying to take people's money. And in a lot of cases, there actually are a lot of scammers and fraudsters taking people's money. So it's kind of to be expected that this is happening. It's annoying in the sense that it does handicap some of our financial innovation and evolution that's going on. If you're much more laissez-faire, personal responsibility minded, then you kind of look at it and you're like, well, if people are miscalculate and entrust their money to a fraudster or a scammer, then they should just lose it. And they won't get to do that very long, right? Because they'll just lose all their money. But, that's not really the society that we live in the world at large. It is, I guess, perhaps a lot of the way that the Chinese kind of think of it. In terms, there's definitely a culture difference between the East and the West when it comes to keeping the contract and whatnot. But I think this is going to and has already hit Ethereum a lot. And Ethereum's already got struggles with their scalability. I mean, look at how much CPU processing time it takes to run a full node with Ethereum. Look at how much their blockchain is growing. And, you do one of these large ICOs and it freezes up their whole blockchain. Meanwhile, Bitcoin rolled out SegWit, which is now activated and live on the Bitcoin network, which one of the things of many that SegWit fixes is transaction malleability. And what transaction malleability is going to enable is layer 2 scaling options, things like Lightning Network, or, and this isn't really talked about as much, but Blockstream and Adam Back came up with the whole idea of a sidechain and then a two-way pegged sidechain. And Blockstream's been rolling this stuff out on Elements Alpha, which is a project for these sidechains. And what these sidechains are going to enable is you're going to be able to do all of your ICOs or your altcoins or whatever, you're going to be able to do them as a sidechain to Bitcoin. And they're all going to be, it's going to be interoperable. And instead of having a token that is its own token in itself, like Litecoin or Dash or whatever, instead you're going to be able to lock Bitcoins up on the main Bitcoin sidechain, main Bitcoin blockchain, move them into a sidechain, and then have your new rules on that sidechain. And then if, for whatever reason, you screw everything up over there, you can always unlock your Bitcoins and bring them back into the main Bitcoin blockchain. So this will now provide a floor in terms of the value of the capital that you move into these new experiments, but also give you the upside potential. And so, one blockchain to rule them all. Bitcoin with side chains now being a real option, we're going to see a huge amount of development and everything come back to the Bitcoin blockchain because it's the only blockchain that has a proven record when it comes to security, scalability, and liquidity. And we already see Ethereum groaning under some of the stresses in terms of the scalability issue, and they've already had massive security incidences throughout their history. In fact, they've breached the immutability of their blockchain. So you can't, why trust the Ethereum blockchain? It's not immutable. They've proven that in the past. And so, this is all very bullish for Bitcoin and very bearish for all of the altcoins. And for Ethereum also.
Wow. Yeah, you really make the case and you remind us how strong Bitcoin is and how it's going to continue to dominate. And I think that's just really telling, especially considering Bitcoin was the first one to come out and it still continues to be the one that people trust and is the dominator. So I think that's really cool, really unique, because that's not always true in technology.
Right. Well, I mean, it really raises the issue, is immutability important? Do people value immutability? And what I mean by immutability is when you do a transaction, do you want that transaction to be immutable, or do you want it to be able to be rolled back without your consent?
No,
right?
that's not good with money.
Well, no. I mean, that's part of being an electronic peer-to-peer cash system. Part of being cash is that it's irrevocable, that it's immutable. Once you give the $100 to somebody, you can't just take it back from them, right? And that's one of the big problems we have with our current financial system, is just how soft the money is. A good example, I had ordered some service on my American Express, and the service provider never provided it. And 18 months later, I had American Express do a chargeback, and I got my money back. Like, how many people could that money have possibly gone into all of their pockets? And then when I do the chargeback, you know, it sets off a daisy chain of illiquidity and insolvency that ripples through all of those people who had touched that. Effectively, American Express reorged the dollar blockchain. That's what they did. I mean, it didn't matter because it was only like $1,200. But what if it was $120 million that they just decided to, okay, that transaction never happened. And all the people for 14 months who had relied on all the other transactions that came out of that $120 million transaction. I mean, what if that $120 million transaction had then been paid out in dividends to thousands and thousands of people who had then gotten haircuts and suits and all this stuff, and you roll back that $120 million transaction because your blockchain's not immutable, and all of those other consequent transactions just cease to exist also. I mean, people need to realize that immutability is a very important characteristic of a blockchain.
So Trace,
and Bitcoin has immutability, and Ethereum does not.
So real quick on that, many people have said this, and you know, even Ethereum founders, they say, hey, you know, Ethereum is a technology. It's not meant to be money. Bitcoin is meant to be cash, meant to be money, digital money. Is there any, I guess, empathy that you would have for Ethereum if it's not money? It's just used as a technology, and does it have a purpose in that sense?
Well, I mean, what is its purpose then? Because with rootstock and sidechains, you can now port everything that you can do in Ethereum. You can port onto a rootstock sidechain, and then have it interoperable and backed by the complete immutability and security of the Bitcoin network. So what do you even need Ethereum for? Is kind of my question, other than a nice test bed, you know, where you test stuff. But if you actually want to have real substantive economic transactions, if you want to have real substantive smart contracts, like, why use Ethereum when you can now use rootstock on a Bitcoin sidechain and get all the benefits of immutability and security and liquidity and interoperability that you don't necessarily have with Ethereum? I mean, what's the purpose of the technology that they're trying to accomplish? I mean, if you want to have a real smart contract with real economic value, wouldn't immutability be an important characteristic for that?
I agree with you. Yeah, no, that's absolutely right.
Yeah, so I mean, I don't know what exactly they're trying to solve. I mean,
but you've heard that though, right? That Ethereum is not meant to be money. You've heard that though. Ethereum isn't necessarily meant to be money. It's a technology, a platform, and that's
right,
what.
But a platform for what?
Right.
Right. Like is it a platform for smart contracts? Because, like, last time I checked, with a smart contract, you want to have economic value attached to the smart contract. Otherwise, like, what's the purpose of the smart contract?
Right.
And so, I mean, is it a database? Is it, okay, you're trying to become the world's computer? I mean, what exactly does that mean? I mean, and why not just use AWS? You know, if you want to harness lots of computer processing power. So, I mean, you know, I'm interested in the economic value of a peer-to-peer cash system and the things that we can build from that, which include smart contracts that have significant economic value attached to them. And guess what? Bitcoin with SegWit getting activated, boom! Like we can now have rootstock on a sidechain to Bitcoin. So, I mean, you can now do very large economically substantive large smart contracts, and have Bitcoin's immutability and scalability behind that.
That's strong.
Which means as an investor, as a holder, as somebody with capital, you can rely on that.
Yeah, that's strong, Trace. Okay. Well, here, I think many people were a bit shocked that Bitcoin actually went up after the Bitcoin Cash hard fork happened. Many people were worried about having two Bitcoins and what that would do to the Bitcoin price. And I just want to get your thoughts. Were you shocked as to how everything reacted following the Bitcoin Cash hard fork? And are you more open now to, let's say, future hard forks and what that might mean?
I don't know that I'd say I was shocked, but I was definitely surprised. I mean, the issue had been brewing for several years, and it hung like a cloud over the whole concept of a fork with Bitcoin. And part of this is because the Bitcoin core team has used the position that they're in of intellectual authority and complete dominance. I mean, they're the Jordan's Bulls of cryptocurrency teams, right? Like, they're not JV bench warmers. Like, the Bitcoin Cash team is a bunch of JV bench warmers. But they use this position. Look, we got forks. These could be dangerous to users. There could be confusion. People could lose money. There could be lots of these potential risks. And I think a lot of people looked to the Bitcoin core team and this intellectual development, and it raised lots of it raised a lot of doubt with a lot of people. They're like, man, well, what could happen? Like, maybe we could lose a lot of money. And then Bitcoin Cash came out, and there was responsible replay protection with it, and for the most part, people have done pretty well with it. A lot of the risks that the Bitcoin core team warned about, guess what? They've actually played out. People have actually lost money, in some cases a lot of money, because of the confusion. Bittrex, one of the largest exchanges, their CEO put a tweet out saying, look, if you send Bitcoin Cash or Bitcoin to the wrong address, then we're not going to go get it for you. Just consider it lost, right? And so, and people have done that because they've implemented the same address types, which can be extremely confusing. You screw up on a copy paste, and your money's gone because you didn't check down to the exact last decimal. Take Litecoin, for example. They implemented a different address type, and so you can't really confuse a Litecoin address for a Bitcoin address, but you can easily confuse a Bitcoin address for a Bcash address. So new users have lost money. Unsophisticated users, new users have been confused by the branding and by the naming and all of this stuff. So yeah, there has definitely been some type of damage that has resulted because of this fork. But you look at the prices, you look at the market caps and all of this stuff, and you have to look at it and be like, maybe it unlocked some value too. Maybe it unlocked some value. Maybe it unlocked some of this fear that people had toward these forks and these hard forks. And removed a lot of the uncertainty because we actually played it out. And so it actually makes me kind of look at SegWit 2x that's going to be happening in a couple months, supposedly, and be a whole lot less. In fact, I kind of look at the SegWit 2x and I kind of think, this thing's not even going to make a ripple in the pond. Bcash kind of stole all their thunder.
So what happens in a SegWit 2x scenario? Is there going to be, a split again, and how does that really play out?
Yeah, I mean, supposedly you got a bunch of these companies that have said, "Oh, we're going to run the SegWit 2x," and a bunch of miners have signaled saying that they're going to mine SegWit 2x, and okay, so they start doing that. Guess what happens to Bitcoin? As we've already seen play out with Bitcoin Cash, is okay, if a bunch of mining power shifts over to SegWit 2x, then it will decrease the rate of block emission for Bitcoin, which will cause the Bitcoin inflation rate to slow, which means that holders are devalued that much less by miners. Okay? In the meantime, people who actually want to use Bitcoin, there's going to be less blocks, which means that it's going to get more competitive to get your transaction into a Bitcoin block, which means that transaction fees are going to go up. And that introduces an interesting game theory component, because now people are mining on this SegWit 2x chain, but they keep looking back at the Bitcoin chain, and not only is there the Bitcoin block reward, but there's also the transaction fees. And the transaction fees keep going up higher and higher because people keep bidding more and more to get their transaction into a Bitcoin block. And so eventually, some miner that signed an agreement saying that they would mine SegWit 2x, they're going to break that agreement and come back and mine the Bitcoin transactions to collect those transaction fees. And so it's gonna work somewhat like OPEC. Everybody agrees that they're not going to produce a bunch of oil, but then everybody's going to cheat because it's very profitable to cheat. It's just not profitable to cheat as a whole group. And meanwhile, how many people are actually going to be using the SegWit 2x chain? Well, last I checked, they don't even have software or nodes deployed of any substantial amount. And with Bitcoin software version 0.15.0, anybody who is running a BTC1 node, and this BTC1 node is for the SegWit 2x, and only like 50 nodes were out on the network or whatever, whoever's running one of these nodes signaling that they're going to do SegWit 2x, they're going to get banned from the current Bitcoin network, from everybody running 0.15.0. And so far, we don't know how many people are running that, but something like 98% of nodes on the Bitcoin network are Bitcoin Core nodes. And so it's only reasonable to assume that over the next couple months, people who are running some of those nodes are going to upgrade to the latest version of Bitcoin Core. So that could end up being a significant portion of the network that just flat out bans you if you're running SegWit 2x, even before SegWit 2x goes live. So I think it's going to be very difficult for the SegWit 2x network to actually acquire any significant amount of protocol deployment. And if there's no protocol deployment, then who's using your protocol? A bunch of services? Well, guess what? It's the customers of those services who are going to determine what those services do, or those services are just going to lose money and then eventually go out of business.
All right, Trey, so let's talk about Litecoin. I've always liked Litecoin. I've interviewed Charlie Lee, great guy, and it's one of those honest altcoins out there. It was considered the silver to Bitcoin's gold, and we've talked about this in the past. But Litecoin, as of lately, I mean, it really lagged Ethereum, it lagged Dash. They were all trading about the same price, and then the other ones took off. And to me, at this point, it was always like Litecoin was a beach ball in a rising tide environment, and it was obvious that it would eventually rise. But I'd like to get your thoughts and insight as to why Litecoin is rising, and what do you think about it?
Well, I don't know that it would necessarily be obvious that it would rise. I mean, what is the actual use case of Litecoin? Which is kind of an interesting question. Like, what do people actually use it for? Because I mean, how many transactions does it do on a daily basis? And how much are people willing to pay to use the Litecoin network? Like, what are their transaction fees in US dollars, to give us a metric on like a 200-day moving average? But mainly, it looks like one of the reasons for Litecoin is to obfuscate your record of transactions and things that's happened. And what SegWit getting activated on Bitcoin has done is it enables things called cross-blockchain atomic swaps to take place. And Litecoin has actually already done a Lightning Network transaction on their actual blockchain. And so, after that Lightning Network transaction got done, that's when we saw this big rally in Litecoin happen. And so what I think is happening is people are seeing an increased potential use case for Litecoin in obfuscating transactional history and being able to disintermediate third parties in being able to accomplish that. And what I mean by that is you're going to be able to take Bitcoins, cross-blockchain atomic swap them into Litecoins, move the Litecoins around in Lightning networks to cut the audit trail, and then cross-blockchain atomic swap them back into Bitcoins. And so now you've got Bitcoins, which if you're an investigator or the tax man or whatever, it's now extremely difficult to trace the history of those blockchains. And Litecoin becomes the tool that you're able to do that with. And so I think the market's kind of looking at this and being like, wow, this was theory and now it's actually implemented. Litecoin therefore has more value or more potential value.
Wow, so some people are saying $300-$400 Litecoin. Is this something that, not a hard line prediction here, but I mean, is that reasonable in your opinion?
I wouldn't say not anytime soon. I like to look at the current price divided by the 200-day moving average to get a relative price, and then I like to look at that based on the first, second, and third standard deviations to then figure out whether something is overvalued or undervalued. And while I haven't crunched the numbers specifically on Litecoin, I bet if you were to look at the current price divided by the 200-day moving average, that Litecoin is way overstretched its 200-day moving average, and therefore is probably within the second or maybe even the third standard deviation in terms of being overvalued. So now would probably be, at least based on the past performance and probabilities and just overall statistics, now would be a time to sell it. Mm-hmm. Whereas Bitcoin, on the other hand, is only at like 2.1 or 2.2 times its 200-day moving average, whereas the previous bubbles were like 8x the 200-day moving average. So Bitcoin is more fairly priced, you could say. It's neither overvalued nor undervalued right now based on 200-day moving averages, whereas Litecoin is most likely very overstretched its 200-day moving average. And without some major fundamental change to justify that increased melt-up in price, which I don't think that having a live Lightning Network transaction, I just don't think that's big enough news to justify like a permanent melt up in price. I think we're going to see profit taking and consolidation. But who knows? Cryptocurrency always surprises me.
That's so, the caveat.
It's always fun to hold a little bit of the fun ones. I actually hold a little bit of Litecoin. So I hope it goes to $300 or $400, but would I bet on it happening? No, I wouldn't bet on it happening.
All right, Trace. Well, final question here. The dynamic of a rising market, any market, is that you always need more buyers than there are sellers, and for the price to continue to rise. And throughout Bitcoin's history, other than, let's say, the last day or a couple days, I mean, everyone is sitting on profits. And does it concern you that essentially everyone who's ever bought a Bitcoin is sitting on a profit and in theory is a happy seller? They're in the money. Just some final thoughts on that.
No, it doesn't really concern me that much because Bitcoin, September 2017 Bitcoin is not equal to July 2017 Bitcoin. They are fundamentally different assets. Okay? When you change the rules of the protocol that are being enforced, it's like changing the atomic structure of the asset that you're dealing with. And so it's kind of like lead. You know, you take one atom away from lead and you've now got gold. Like that's all it takes. You just have to take one atom out of lead and now you've got gold. With SegWit getting activated, Bitcoin is now a fundamentally different asset. And so because of that, it now has way more potential that can actually be realized. I mean, things that people thought could happen, until it actually gets executed in the code, it's still very much blue sky. But now things like cross-blockchain atomic swaps, fixing transaction malleability with SegWit, the scaling issues, side chains, porting over rootstock, all of this stuff is now, there's a complete green light. It can all come over to Bitcoin now. Whereas before, it was, well, maybe it could come over, maybe it won't. Depends whether the miners are going to activate it or not. You know, there was a lot of uncertainty. Now it's a fundamentally different asset. So, you know, anybody who wants to look at the price chart and compare July 2011 Bitcoin with July 2014 Bitcoin, with July 2017 Bitcoin, and even with September 2017 Bitcoin, they need to understand that these are fundamentally different commodities. They all have the Bitcoin name, but they're fundamentally different commodities. That they're not equal to each other. And so, you know, that's kind of what I'd say there is, you know, so don't make a miscalculation, an economic miscalculation with a fundamentally false premise that you're dealing with an identical commodity. Right? Like if you're doing your technical analysis or like looking at all this stuff, like, you know, keep in mind that you're now dealing with a similar but fundamentally different commodity. A commodity that now has so much more potential and stuff that can be built out. And so you have to look at your probabilities that things like Lightning Network are going to get traction and be built out and rootstock, and then discount all of that discounted future economic activity into a current price. And so I think that's what the market is trying to figure out right now in their price discovery is, you know, what is the value of Bitcoin now as built out in the future based on the current software rules that have been implemented. And it's a really difficult thing to do because it's so highly technical and like it's a very, very difficult thing to do. And so I think a lot of people have a lot of widely varying opinions on what that value is, which is why we're seeing such wildly crazy price movements. Additionally, things like Bitcoin Cash, I mean, guess what a lot of Bitcoin holders are doing with their Bitcoin Cash? They're selling their Bitcoin Cash and buying Bitcoin itself. So that's a lot of hodlers that are effectively increasing their Bitcoin position and drying up the saleable Bitcoin that is out there. And these are already very strong hands that have no reason to sell their Bitcoins at all anyways. You know, they have enough money to fund their lifestyle. So what are you going to, I mean, if you're going to take Bitcoin profit, what are you going to take it into? You're going to take it into dollars and a bank account? That's a bad idea. That's why you went to Bitcoin in the first place. Are you going to put it in gold? Well, gold's kind of lackluster, underperforming. Maybe real estate, bonds. Why not just stay in your Bitcoin? It's been good so far. And why have tax recognition events that you have to deal with? So, you know, there's a whole bunch of this that's all kind of going into the price discovery mechanism, and why one of the reasons I think we're seeing such widely varying prices. And Wall Street's going to come in a big way with these LedgerX options. So that's going to be interesting to watch. Are they going to try to drive the price down? Are they going to try to drive the price up? It's going to be a wild September and probably a wild next 6 months, both up and down all over the place with the price. I mean, we just saw a $500 swing in the last 24 hours. Incredibly fun, right?
Yeah, every time it moves like that, it's the death of Bitcoin. That's the articles you see come out. This is the end. The bubble is here.
Yeah, well, sell me all your Bitcoins then. I'll buy them up for $1. Every single one of them.
All right, Trace. Well, that's a lot to chew on. Everyone, Trace Mayer. Trace, thanks for coming on the show. If people want to learn more about you or learn and listen to your podcast, let them know where they can go.